Can we ever trust what JPMorgan says? Now, this is the caption for today, and this is going to be mind-boggling because there's two views in the market right now. By them. Yes, indeed, it's by them. So let's just watch this video today and end of the day make a decision, because I feel that something big is definitely boiling right now, and this is going to be a very profitable one trade that you really don't want to miss. Okay, let's go. Now, before we go there itself, disclaimer apply as usual, and thank you Ames for the kind sponsorship. Now, the dove versus the hawk. Remember this, okay? Why? Remember yesterday we talked about Brenner, right? Brenner seemingly is the dove right now. Again, now she was the dove, most dovish Fed official. Then after that, because of what happened to inflation, she moved to become a hawk, right? But the problem is now she seems to be like moving back to dovish again. Okay, so yesterday I talked about this. She was stating that the interest rate hiking now has a little bit gone a bit too fast, and one must be very careful. But the other official Fed master came in and said there has been no progress on inflation, so interest rate needs to move higher. Oh wow, okay. So this is a very different view, all right, from two different ladies, and of course this is like whatever she said is like seemingly directly telling Brenner off. So that's the reason why I say now the Federal Reserve camp has the dove and the hawk again. That's very interesting. Okay, so what does it tell us? Because this coming Thursday, which tomorrow, we're going to have the CPI data. Now the market is looking at it from two different angles. Now some people are saying that it will be around here. Okay, some people say that it will be lower. Okay, so majority of the people looking at is same or lower. But the question is, what if for some reason it goes higher? Oh my God, if that really happened, this is going to make and break the market. Okay, so let me explain to you what this JPMorgan research team came out with. Okay, now the thing is this. JPMorgan team says that investors should expect a 5% sell-off on the stock market if the CPI data comes in above 8.3%, okay? Now, let me explain this more to you, all right? So, now, the thing is this, okay? According to JPMorgan, if the number is above 8.3%, it will be ahead of the consensus of 8.1% reading, okay? So, if they are trying to say that if it's going to be 8.3 and higher, wow, the stock market may go down by 5%. But, of course, alternatively, if the CPI comes out 7.9, that means lower, it could spark a 3% rally, and it will bolster a call for a Fed pivot. Okay, so what I'm trying to explain is here, if the number is 7.9, example, okay, the stock market will rally because, oh, okay, inflation is coming down. Okay, at this junction here itself, I couldn't tell you this, I couldn't laugh on it. Why? Now, we do know that the energy prices have came off a little bit more in the month of this September, right? Okay, but the month of October right now we're seeing is that the energy prices are going back up again. So even at 7.9, the market may rally for time being. Okay, then what happened? The stock market will sell off again. This is what happened again last month. So my view is this, okay, whether or not, okay, most likely the market will still come off, okay, but of course if the market, the data come up be above by 8.3, this is going to be bad. Now my personal take is 8.1. which means that I believe that it will be a same figure, which means that the energy prices will still be down because we saw that, okay, but I believe that shelter price, logistics, other factor, etc., is still at the same reading, if not higher. You got my point? So that's how I see it, and that's why I think tomorrow CPI is going to be a flat in terms of the number. But I still think if the number can be flat, let's say it's 8.1, that means that nothing has been done, right? So maybe the market will drop by 1 or 2%. I don't think it's a 5%, in my opinion, okay? But of course, Jamie Dimon says a different thing. Now, Jamie Dimon actually says that now that there's a very good chance that we can see a recession in 6 to 9 months' time. Now, of course, long time ago, Jamie Dimon was saying he's going to be bullish in the market, but now he flip-flop, obviously, and says that now 6 to 9 months' time, the market will come off. Now, in fact, this news was 1 day ago, and I was supposed to cover this yesterday, but I got this feeling if I cover it yesterday itself, right, most likely the market will rebound. Because I'm observing this pattern. Whenever Jamie Dimon comes in and talk about the market, especially he say buy, the market will sell. When he says sell, the market goes up. So this is what I see. And the best part is this: the #1 ranked strategist and this is JPMorgan, Marko. All right, this guy has been bullish since 1 month ago. Yes, 1 month ago he stayed bullish. Now we all know that Marko has been calling for buy for the longest of time. In fact, itself, right? Someone actually plot his chart. Okay, he had been giving buy call easily more than 10 times this year. And of course, we have the Dow Jones at a historical high this year, and then all the way down. Okay, the market now is up by 20%, and our dear friend here is still calling for buy. So the question is this: how can we trust their calls? But again, if you look at it from this perspective, where Jimmy Dimon says that there could be a recession, which I've been saying this, so yeah, okay, so it's gonna be a paradox here, right? So see how you feel about the market. But for me itself, I already said this, guys. I believe by February, the March latest, we're gonna see a global recession. I've been saying this for the longest of time. Now, global worries are also escalating at the same time. Of course, this is a parody here to show that the two men, okay, from France and this Russia playing ping pong. Why? Basically, why? Because the thing is, the current situation now is the worry. Now, basically, why Macron is definitely upset with Putin, the way he handled this war, okay, with Ukraine, in this Ukraine. So the thing is this. Now, he has already asked Putin to go slow and try not to have a war, but Putin really don't give a damn, and he says, okay, I'm going for it. So anyway, all right, so if this is going to continue, then things will get very, very bad. And of course, we have Biden and MBS, right? MBS, not the one in Singapore, but this guy, the Saudi prince, okay? So the Saudi prince, Mohammed bin Salman, okay, says that, right, he is definitely going to start giving face to Biden, and by recently, in the OPEC Plus as well, when they decided to actually cut production, this spells trouble. So with the regional crisis now in Ukraine, Russia, and other countries versus what Biden has right now at home, it seems that the global worry is escalating. And of course, Germany PPI growth has now hit the highest level since 1923. Oh my goodness, 99 years historical data. So why is that so? Because prices are still going up, and if prices are going up itself, right, meaning that cost increases, and this is bad. This is really, really bad. And of course, at the same time, the Europe equities flows is really, really bad. Also, look at it right now. The equity flows showing that it's the largest outflow episode for European equities since 2016. That means that funds are really getting out of Europe, and it's undeniable. Who to blame? The thing is that cost is increasing at the same time. The currency is depleting as we are speaking right now. There's a lot of problem going on. So it's going to be quite expected the funds will go somewhere else, right? So now you understand why the US dollar is now in a great shape right now, moving upwards. And the equity market in US is not coming down much because the funds are keep on going in. But the thing is this, you cannot prevent a global crisis. So now UK, the bond market is also dramatic. All right, now the pound has came off, and Bailey has given the UK funds 3 days, okay, to fix the problem. Which means by this weekend itself, right, if the UK fund cannot settle their problem, this is going to make and break the market, okay? So this is where worries are all ongoing right now. And of course, based on my personal TWB system chart, it does shows that, right, the boys are trying to buy as much as they can, but the price is coming down. And my KRW tells me that the selling is genuine. So very simple, as long as the pound today cannot go above 1.10, and if it goes down to 1.088, that could be selling for this week down to 1.0726. And of course, if you ask me, it's all right. My personal view is that most likely it may even go down all the way to touch back 1.05 again, okay? Again. And I'm still very bearish that I believe that pound eventually will hit parity, right? Maybe by end of this year or early next year, because I believe that the US dollar will be again in high demand as the interest rate goes higher, all right? I'm still looking at 4.5% FYI, yeah? Now, Yellen came on the TV and she began to tell the whole world that US economy is doing well amid all the global economics uncertainty. She says that yes, we have some slowdown, but the strong recovery is there, and it shows that the job reports we have a very resilient economy. A little bit here. Now the thing is this. Jerome Powell really want the employment data to go down, so that means that inflation can be curbed. But again, for her itself, she had to be the pong pong girl, the cheerleader, to say that US is good. So it's telling you that, hey, the job report have been good, right? So that's why we have a resilient economy. So it's like standing from two different angles. Anyway, she reiterated that lowering inflation is a priority of the Biden administration, which means that there's no chance there will be a rate cut. Okay, no chance, at least for now, until maybe mid of 2023 or even later. So you can see that now, although there's a lot of downgrade now by IMF, okay, but she still think that everything is all good and US is doing well. Okay, so well, this is the latest interview, but the problem is this: we have the top 5 holders of the US treasuries, and of course I did tell you guys the first one was Japan, second was China, and third was UK. Now Japan itself, for some reason, okay, for the first time, they started to bail out. Oh my god, the Japanese investors shut out US bonds by currency protection costs, which means that they are bailing out. Oh gosh. Now I did say this a couple of MAOs ago. I said that Japan will bail out because they need some money. I told you that. China will bail out obviously because of very clear unhappiness with America. And of course UK will bail out because they need money. So the thing is this: for Japan, who hasn't been doing anything else but to buy, is now telling the whole world, you know what, let's cool down a little bit. So if the US economy is really doing well, then why is it bailing out? So of course you may say it's because of the individual problem, which is possible, but still this is not a good sign. And of course, because of the bailout itself yesterday, we saw a little bit of stifle effect on it. Okay, not a lot, but some effect. So to me, it's alright. Okay, maybe we will see a little pullback here, maybe because of this selling of the treasuries. But after that, it's a bang, it's gonna go high again. So this is my personal view of the market. All right, and of course, analysts are getting very worried right now. Ford, GM, and other car makers faces 50% profit slump next year, according to UBS analysts. And you can see that since 2020 to 2021, we have a very good time because the QE was all the way involved in the market. But now, once the QT has started across the whole world, then what happened? Look at it. Oh my God, the numbers are really coming down. The automobile on the top 600 has given up all their post-pandemic gains, and this is not a good sign because now we are back to pandemic time. And this is, if it goes down further, that means that whatever had been built, all the gains is now gone. Okay, and if it's gone, it's all right. Look at Tesla, because this is where I'm telling you this. Now, since Tesla broke below 243, I was very bearish and I said that it will go to 207. And of course, we've been telling friends around us to consider to short, and I'm happy because they are shorting it. And this morning, when the price ended at 216 itself, we are just only like $7 to $8 away from our target itself. Congratulations to all of you guys. This is how we trade the market. Not only we just say, we show you charts and we tell you what to do, and you can really go for it. Now, of course, we have the earning coming up soon, and I suspect the earning can't be any better. So it might spike it may cause the market to do a sell-off to maybe below 200. But of course, again, once you go below 200, it's all right. I believe like sharks in the water. When blood in the water, shark always arrive. So maybe we can see some buying around this area. Okay, so watch out for this area as we continue in this market. And of course, in terms of indicator-wise, we are kind of near the usual oversold region, yeah, at the moment. Okay, so we have all this information right now, and let's look at the chart for the market for today. Let's take a look. Now, first of all, wow, I can see that this is really incredible. Look at the way the Dow Jones between my 82.5% and my 77.5%. Okay, let's just zoom in and see this one here. This is very crucial right now, everybody. Now, this is the 80% mark. Yesterday, we saw the Dow Jones went all the way up. Okay, now initially it went down first, right? We thought that it took out the short sellers and it pumped it up, and of course many short sellers was being bumped up. But the thing is this, towards the end of the day, the market pulled back down. Okay, the market pulled back down, and now you can see a very strong resistance at the 80% mark, which is at 29563 level. Now the crucial part is this, guys. This is double doji. Now, the last time we see a double doji, we always get to see the market moving big time. So let me just show it to you here. This is also a double doji here, and the market went up. Okay, agree? Okay, let's just check. Now, that is double doji means you had to be on side by side. It means that two doji side by side. Okay, and let us go back a little bit more to see any more similar pattern. Okay, we don't have over here. Okay, here we go. Double dojis and market went up. Okay. Then of course, do we have any more? Let's take a look. Okay, double doji, and the market crashed down. Oh my god. Okay, so in short, what I'm trying to explain is that when you see a double doji in the market, usually we will see the market moving big time. Okay, usually that is the case. All right. Oops, I saw some movement right now in the market. I can see that. Seemingly there's some buying at the moment. There's a sudden uptick at the moment. Let's take a look right now. Wow, this is live. Suddenly there's an uptick of a buy up in the market. Not too sure what has happened and causes this, but let me just check the pound market. Maybe that will give us some insight, because I kind of expected some intervention to come in. Let me just go live a little bit. Where's my pound? Okay, there's some buying on the pound, I think. Okay, there's some buying on the pound. All right, so things is happening right now. Let me just do a little check over here itself, and indeed just double confirm itself, there is some intervention coming from the pound. All right, look at it, this is the intervention. Okay, the pound just shot up, okay, just all the way in. So this is how the government play this game, but I can tell you this is really stupid, because when you do things like that itself, right, it's not going to save the day. In fact, it will escalate the problem, because we have seen this before in 1992, where they came in for some, they did come and intervene, and after a while later, the boys know that, the boys really know it, and they go for the kill. They come in hard, and they go very, very hard, and they go for then the market just took it in, because it's like free money, because you cannot deny a market that is really going down. Okay, so yes, we have intervention right now live, my god, okay, but it's not going to stay long, in my opinion. Yeah, so traders, you just have to be very careful. All these things running around, and you don't want to be caught on the wrong side of the track. Okay, just be very careful, because this is what is happening right now. Okay, all right, let's continue on this, and let's just show to you the Dow. So sorry for this movement here itself. Okay, anyway, 2 dojis means big movement coming in. I'll talk about this shortly. Okay, all right, now China A50 is still going down. This is really bad. Okay, now take a look here, guys. This is the previous low back in the March period 2022, and this is what we have right now. Very bad. The market has lost the MA30 2 days ago, and we mentioned to you guys that the 13,000 is psychological level. It cannot be breached, and the market has broke below it. And the thing is right now is that the next target I told you guys will be the one here that was created back in March, and that is about 12,280, and the market is definitely going there, because there's going to be a lot of stops there, right? So I strongly believe that this will happen. And of course, I'll tell you something very incredible. Look here, guys. This was the point whereby the market reversed upwards, right? And the market went up by 845 points, okay, over this a few days, and that was because of the intervention from the Chinese government. All right, in my opinion, yep, because I cannot find any related stuff, but I believe it is. Okay, so this is an 800 point upside, and if the market failed, logically speaking, the market will have to come down by 800 points. So which means that if this is gonna be, if this is gonna be like pumped up by the boys, okay, by 800 points, the market must come down by 800 points. So which means that the market may have to go down all the way below 12,000, then the market will basically look for a base level. Oh my god, that will be very bad indeed, correct? So the thing is this, if the market really breached 12,280, okay, let's hope it stays there, alright, because that's the last low. But if the market escalate is selling, then we may see all the way to 11,900 series. Now that will be a very bad news, because if the China market is crumpling, the stock market is, bad, then it will really have a repercussion, and the whole world economy is going to get it big time. Okay, all right, so let's just look at the market now with the regular stuff. Let's see. Okay, first of all, Dow Jones for today. As I said, there's 2 dojis here. Today, the Dow Jones opening price is within 2 pivots, and if the market can go past the pivot 1, 29,464, we can see a further upside to the pivot, the BNB RL level at 29,627. Okay, 627. Yeah. Now, the downside, if it breaks MLP, which is 29,262, then it may come back down to the support level at 28,917. Now, do note once again, the CPI data is tomorrow, not today. Yeah, today's a PPI data. Okay, so based on what I'm seeing now, my KSI is showing that there's strength in selling, but my KRW is having a mixed bag here itself. So we may see a little bit of sideways movement. All right, probably towards the downside, but still, we'll watch out for this one. Okay, now how about the NASDAQ? Now, NASDAQ is still continuing going down, but very interesting. Yesterday, it really got itself support again at the BNB SL level, and that's 10,831. So it seems like every time that when the NASDAQ hit 831, it will just stop here. Okay, guys, 831 itself will be the key support for today. So if the market loses 831, watch out. Okay, to us today, the pivot one is 10,774. So buy right above OP is a buy already. But if the market sell further and below pivot one, then the selling may bring it all the way down to 10,471 level. Okay, this is something to watch out for. The difference is that KSI and the KRW both are still red. That means that the selling pressure will be there once the market loses the OP level. S&P 500. Well, let's take a look here. It's been sideways for the last 2 days. KSI green, KRW red, so mixed back in the indicators. Now, simply the support level will be the BNB SL level at 35.58. Alright, MLP is 3606. We are having it right now. If the market can stay above 3606, the upside is 3652. But if the market loses that 3606 support level, then it could come down all the way to the BNB SL level at 35.58. Now you notice that under now that there's no clear shot other than NASDAQ, and that's why we're all focusing on the NASDAQ right now. Now for Hang Seng itself, right, this is really bad because if the China market is coming down, no way, I mean, there's no other way that Hong Kong can be doing any better. Now Hong Kong, there's a strong support at 16,358. That is a pivot too. But with the KSI and the KRW both in the red, that means that the selling may push it down to 16,358. So traders, watch out for this level. If the market breaks below this, the selling can be worse. But if the market stays support here, it may do a little bit of instrumental buying up. Okay, so watch out for this. Now for the Nikkei, well, you can see right now the Nikkei has lost the BNB RL levels, resistance level, with the KSI and the KRW both red. That means that there will be some selling. Now the one is 26,479, and we see the market really resisted it beautifully. Let's check the chart right now. You can see it. Okay. Oops. Oh dear. Hold on. Okay. All right. Okay. So let's take a look here on the chart. You see, this is the one right here. Okay, let me just pivot one and look at the way the Nikkei went up all the way, hit this point, couldn't go any higher, pull back. All right, this is how incredible this system is. And of course, with the futures of the Dow moving higher right now, that's why the Nikkei did some rebound, but it's still nowhere near to this point here. Okay, so the question is this. Okay, if the Nikkei goes below OP, that means it's going to be below OP and below pivot one, then the selling may bring it down all the way to 26,044 for today. All right, so watch out for this. As a trader, you need to watch out all these key figures. All right. Now DAX will open later, but yesterday DAX has came back down and touched my BNB support level once again. I mean, it's an extension minus 1 times 1. And now the thing is that both my KSI and my KRW is all red. So later on there'll be a red arrow coming up, and that means that if the market loses open later, the selling may bring it back down again to somewhere around this area, 11,900 series. Okay, so watch out for this. But these pivots are not incorrect right now. This is based on yesterday's pivot. Okay, not today's. Yeah. Okay, moment. Oil. Now oil has back from the high. The high was at 92.61, and it back right now. Today is at the very crucial level at 87.57. This is a resistance level for today. If it stays up above it, the first target is MLP 88.69 for today. Now if the market stays below OP, then the main support will be here, and that is at 86.51. That is the BNB RL level. If the market loses that, the selling may bring it back down to 84.80. All right. Now, if the crude oil price come down, usually the equity market in US will also come off. So watch out for this. But the thing is that KSI and KRW, both of them are still supporting this. So be a question mark right now for this counter. All right. Let's look at the gold market right now. Gold. Okay, today gold is a doji directional day. You can see right here, and if the market stays below MA30 and below MLP, we should see some selling. Now earlier it was coming off because of the sudden intervention by the pound. We saw gold push up, but if it's not going to stay long, then watch out for MLP. If it stays below MLP 1667, then that means that there'll be some selling. But very important, there's a stack of KCB at 1669. Sorry, let me take a look. 1659, if I'm not wrong. Yeah, 1660 level. There's a 2 stack over here, and yesterday and today seemingly found support. So once the market loses the KCB, then 1654 will be my primary target for today if the selling continue. And of course, with the dollar strengthening, without a doubt, it's alright. I still putting my guns into this. I still think that 1628 in the long term should happen for the gold market. Alright. Okay, that is gold. Let's look at silver. Silver is coming off a little bit last 2 days, and now we have it come right down to the KCB level at $19 flat. It has touched this morning. So this actually explains why, you know, the silver stay support, because this was the KCB that we have seen the last few days. So now, as long as the market stays around $19, it's fine. But if any selling to come, it has to hold above 1874, because if not, the next selling wave will be $18. And I'm really putting my bid level here because I think that $18 is a very good place to buy some silver and keep. All right, that's something that I want to share with you for today. Right. Then the next two will be Ethereum and Bitcoin. Let's take a look right now. Now for Bitcoin, sorry, Ethereum first. Now Ethereum is basically gliding down, okay, and it's lost the BNB SL level, which means that it should be able to go down to 12.52. Now the support level here is 12.95. So unless the Ethereum can go 12.95, now at the moment it's above 1, so above pivot 1, above OP, usually it's a buy, right? So you can see the market moving up. But if it pulls back, then 12.52, okay? Watch out for that. Now Bitcoin is basically also coming down, but it has a very strong support yesterday. BNB support is 18881, okay? 18881. So yesterday we saw a very incredible support over here, and it bounces up, and now it's back to 19,000. Now pivot 1 today is 19,032, right? And it's now staying above. ML is 19,127. So very simple. If the market goes above ML 19,127, it may go all the way to 19,419 because that's an MA30. But conversely true, if the market goes below 1, then the selling should come back down to 18881. Anything lower than that, then 18651 will be the next target, and of course that will have a repercussion effect on the NASDAQ. And of course, when NASDAQ is down, then everyone will have to follow. Okay, so this is very important. KSI and KRW are both, KCX are all looking at the downside. Okay, all right. Now before we go itself, right, I want to show something to you itself. This is the 10-year yield. Okay, you can see that's what's happening right now. Seemingly there's some selling in the market. That's why you can see the sudden impact of the UK pound going up and the equity market recovering. Now, as I said again, is that if people are dumping the treasuries, that will affect the yields a little bit. Yeah, just take note of that. Now, this is going to be very important, is the VIX itself, because a lot of people have been asking me about the VIX. Okay, the VIX is definitely firming nicely, very nicely here, and I said this before. I'm going to make it smaller for you guys. It has broke the trend line, and the first target I have is 34. Anything crazier, it may go all the way to 44, and that for it to reach this point here, it has to be a form of capitulation. So the way I see the VIX right now is seemingly building to something big to happen. Now it may not happen these 2 days, but if the earnings are bad on Friday and the CPI data is like above 8.1, then yes, I believe the VIX will shoot up all the way to 44. Okay, all right. I wish you all the best for trading yourself. Have a great day. I'll see you again tomorrow. This is Cal signing off. Bye bye.